Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. In the second video let's take a look on the Great British Pound, because today in euro currency it's not much to talk about. In the first video we talked about the Australian dollar, so today is a Forex update for us. So today we also will not take a look at the gold, because on the gold we just need to see and wait and see a reaction on the current conditions on the markets. Some gold market, some technical barriers exist for the upside continuation. It's really strong impulse right now stands in the market, and we need to wait when the market will come down a bit, because currently it's not quite correct to take the new long position and the technical conditions that we have, and we have to wait for this pullback. That's why the last chance that we could take a look at, so last asset is the Great British Pound. On the cable, 2 days ago in an update we said that market was able to hold at the edge of the bullish context. It has happened when the market was able to hold above the 122 area, because the breaking of this confluence could mean the total collapse of the bullish scenario. In this case, I'm ready to bet that market will drop below the C point and erase this ABCD pattern, because actually that was the last strong support area before the C point, and it's no problems for the market. Could be just a downside continuation, but market was able to hold here and start upward direction up from this level. It means that, well, in the simple calculation of the extensions and contractions swings, it means that here market should be in a kind of the bullish continuation swing, because here there was extension, contraction, specific extension right to the COP target, test of the confluence resistance, pullback. Now markets comes again to the resistance area where we have. And last time when we talked about this, we said, well, market definitely will show some pullback here, but it should not be too significant compared to this one. We should not get this one pullback. We should get something smaller, because this is second test and market now stands in extension to the next target theoretically, which is the 132. That's why we should keep the close look at what will happen around this level. Currently you already could see on the 4-time frame chart this market feels some problems with the breaking of this area. So recall what we said, last hour's stop was burned by the buy, and it has completed perfectly. Indeed, market has shown the pullback to 30% support area, confidence support on the intraday charts, right when the OP has been hit, monthly pivot resistance, bottom line 1.7 target. That was great for us on the 4-time frame chart, and said you could consider taking the long position with the pullback here, and indeed that has happened. Now market's trying to climb higher, but definitely feels some problems. You could see some bearish divergence is growing here. Grabber has been formed, deep retracement stands, and some kind of the wedge consolidation is forming. Here we could suggest a few scenarios. So first of all, market could reach 1618 extension of the bottom line, then start downward retracement, right? Potentially we could also consider, for example, something like well, say BCD pattern, or better to consider it on the daily chart. So maybe market could form this kind of action, but in this case probably it should have high extension. It will be somewhere at 2890, so it will be above the confluence. It's probably next destination point will be above this area. But first probably some reaction should happen on the resistance that we have, or it could be something like, let's by the way check, this will be the pre-drive, for example. This could be first. Well, in this case market should reach first 127 and then show on another continuation. Currently it also doesn't look like the free drive is forming. So it means that, well, let's focus on the probable direct downward reaction. Maybe market could climb slightly higher and hit the 1618 extension of the butterfly, but definitely this sweep or action indicates some bearish pressure appearing. This candle, that is a grabber also, it's almost the reversal candle. This market creates the new top but close almost below the lows of the previous session, and that also indicates some bearish pressure in the market exists. In the case of reaction indeed will start, I think that we could consider two levels. If market indeed stands bullish, it should not drop below the 125.70 area, definitely not below this trend line that we have. This market should hold above it. That's levels that we could accept. First, 26.60 retracement. Second, 25.70, 25.90 is confidence support. That's two acceptable levels for a bullish scenario. This market could reach and without no harm to bullish context. And that's particularly what we will be watching for. That will be significantly smaller reaction compared to what we have on the daily, as we said. So 25.70, it will be something of that sort. So I suppose that will be something equal to harmonic swing that we have already here. So we'll calculate it to the downside. Indeed, 25.88, and it's approximately the harmonic reaction to this resistance. So that's totally acceptable for us. Deeper retracement, erasing of this last swing up could make the negative impact on the bullish context, and it will be significantly hurt if market indeed will drop, shows bearish reversal swing, shows deeper retracement, and erase this most tracing leg up. That, in this case, different scenarios are possible, and we even will not be able to exclude the chance of the downward continuation. That's why it's so vital that market should hold above the support area that we have here. So let's see what will happen currently. If you would like to go long, it would be better to wait a bit more and get the market at the specified support areas. For a short position, well guys, you could try probably based on this butterfly, based on the stop that we have, but your stop should be somewhere about the 161.8 extension in this case. And think twice before taking short position before the weekend, whether you would like it really or not. So let's see what will happen on the cable.